So today I'm going to be doing a breakdown of a trade that managed to help a student come out of 5K in drawdown into 2K profit and then secure that profit for a payout. So this is one of my A-tier setups. So I'm giving you guys this knowledge for absolute free on YouTube. And hopefully you guys can follow along while I break this trade down. But I managed to actually secure 3 payouts on 3 different accounts yesterday because of this. One of my students managed to get out of 5K drawdown back into 2K profit on an older account to then secure that payout. And then I had another 3 students that managed to pass 2 accounts and then another one that secured the payout. And then plus some of the other mentors, they were able to pass some extra accounts to gain some more capital. But let me go into this and explain it, as this is one of my best setups that I've seen in a while. So let me go through it and explain exactly what I did and how I seen this trade coming. So let me jump right into it. So as you guys can see, here we are on GBP USD. You guys might be thinking, was there not a bank holiday yesterday? The reason I still traded, even though it was a bank holiday in the UK, was because I traded during New York for this trade. So London session, I did sit out. As you can see, London session was only 16 pips. This is, of course, not the whole London session. This is just the hour that I trade. I tried to trade only a set hour or like a set time. So it just makes me more restricted. This is the highest volatility hour that I know of. So I tried to only stick within this time. But of course, London session was probably not going to have that much volatility because it was a bank holiday. So I did want to wait for New York to kick in. So we've seen some more of that volatility. New York, the actual time, key time zone that I marked out wasn't even that big. It was only 18 pips, but the whole move was quite smooth because it lined up with everything. So I still took it regardless of lack of volume for this day. So to begin off, we kind of started on the higher time frame. Let me just zoom in for you guys. Let me zoom in. So we started on the higher time frame right now, and what I was looking for is I was looking for price to cause some sort of inducement, which you guys might call a liquidity sweep or whatever you guys want to call it. There's many different words for it. I call it an inducement, so it's taking out a high or a low that's quite relevant, not just some internal structure. So as you can see on the higher time frame, we're coming into some sort of demand zone right here. We're coming into some sort of demand zone and then giving some sort of reaction to the upside. But I did want to also see, before we just continue higher for no reason, I did want to kind of see, because we had on the higher time frame, we had some sort of buildup of liquidity. We had equal lows right here, inducement, continue higher. I did want to see some sort of pullback before we continue higher again. So I wanted to see that mitigation of this area that caused this inducement right here. So on the lower time frame, it seems a little bit better on the 1 hour time frame. As you can see, we've had this buildup of liquidity. We've had the inducement back to the upside, causing break of structure. So I wanted to see some sort of retracement into some sort of zone right here to then continue upwards. So when we started the day off, nice 15 minutes. I was waiting for London session. London session didn't look good to me. So to me, London session looked absolutely horrible. And then what I was thinking of, if we come into New York, if London manages to push up here, we take out this high right here. And before we take out this high, I'm not looking for anything. If we do not take this high out, I will not be looking for anything. And the reason is because if I'm not having some sort of inducement or whatever you guys want to call it, a liquidity sweep, I will not be looking for a trade. The reason is the way the market moves is from liquidity pool to liquidity pool. All these zones for value gaps and everything like that, that's just like an extra confluence. The market will not move unless it has fuel from a liquidity sweep. And if you guys do not understand what liquidity sweep is, I definitely try to do your research on it, or I will make some future videos on it, hopefully, because liquidity sweep is one of the most important things. And that's what I call an inducement, because the market is inducing people to get into the market, then to continue to the other direction. So I call it an inducement. But if you're not having some sort of inducement, you will not be able to trade a nice big move, because the market's not having enough liquidity to continue in the direction that you wanted to continue. So if you're just taking trades of, let's say, this zone right here, okay, this zone might look valid, and it's something valid if you had some sort of liquidity sweep before it. If it's so it's giving you fuel, then you're taking some sort of liquidity coming into it. So now you've taken liquidity, came into a zone, so you've got more reasons to then continue back to the downside. But if you're just coming into it, not taking any sort of relevant highs or lows to the upside, then there's no reason for price to reverse. So technically, it is a valid zone. It's quite a nice candle, continuing downwards with, look, a lot of selling pressure, having a break of structure to the downside, coming back into retracing. You might think that this is quite a good zone. But okay, key number one why I did not take this. First of all, there's no medium inducement, so we're not having some sort of actual decent high or low taken. So in this case, I didn't have any decent highs that were taken. And plus, the second one that was definitely, it's like a seal for me that I'm not going to take anything from this zone right here, was the fact that it was not in our key time window. So what I mean by this is that on New York session, I like to trade the first hour. So I'll trade from 2 p.m. UK time to 3 p.m. UK time. And then same with London, I like to trade from 8 a.m. UK time to 9 p.m. UK time. I'm very, very strict with this because this is my key time zone where I see the most volatility. I see the trades actually happen. And over the data that I've collected, this is where I see the actual trades showing themselves. As you can see of the trade that I took, it was in my perfect key time window. That is why, first of all, I did not take a trade of this zone that we had right here. And I actually waited to see that high get taken. And of course, as you can see, I did mark out a different zone up here. And this zone is also valid. So you might be thinking, how is this valid? So to get this zone, we had an inducement, taking out this high. So we induced this high right here. Let me just mark that out for you guys. So we induced this high right here, continued downwards with quite bearish structure. We're seeing that sellers are quite a bit in control. So we're continuing downwards, then causing some sort of break of structure right here to the downside. So because the break of structure to the downside, so in my opinion, this is quite a valid and strong zone to sell from. So after we marked out the zone, we also have this medium inducement marked out. This was like a key indication of one of my reversal models. This is literally like one of my AA plus setups. Like, it's just, you can't get better than this. So I was waiting for price to come into New York session and also continue to the upside. So as you can see, we had that perfect push from London session, continue upwards, maybe giving you some false reaction right here from this zone. This is why I don't like to jump into trades if I do not meet my criteria. I have certain things I need to tick off. A lot of the trades I also take a bit from market intuition because I do have more experience in the market than most people. But most of the time is a checklist. I've got this. Does it line up? Yes. If not, I'm not into the trade. So I was doing some live analysis with my students, as I do for every single trading day. And I was giving them the analysis of this trade, the actual entry and everything like that. My students are actually able to do this quite well because, of course, if I'm not teaching them correctly, of course, what are they going to learn, you know? So my students were actually entered this on their own. I try not to give some sort of signals away because I believe if I give you guys signals, you guys are not going to learn anything. So I try my best not to give you guys signals, just give you guys analysis, and then you guys use your own market intuition, use your own confluences that I've taught them, and then trade from it. So I'm going to tell you exactly what I seen to get into this trade. So as we've seen price coming into this zone and taking out that medium inducement high, as you can see right here, we've taken out that high. So now we know that we have some sort of fuel to at least have some sort of retracement back to the downside. So we've taken out the high. We see a nice push from it. We've came into the zone. And now what I'm waiting for is a buildup of liquidity and inducement. And this was the most perfect example I've ever seen. So here we had a nice buildup of liquidity. So we're continuing down. We made another high, continuing down. So we're having a nice buildup of liquidity, causing these little highs. As you can see, I marked out these main you can call them like trend line liquidity. You can call it like equal highs. They're not perfect equal highs, but they're two highs right next to each other, built up that built up some liquidity. So what the market likes to do is it likes to come up, take out these highs to have even more fuel to continue down to the downside. So I marked this out, and it literally perfectly, this is one of the most imperfect inducements I've seen. A perfect inducement is when there's large candles coming up to take out the high or low that you've marked out, and then to continue back to the downside with nice volume. As you can see here, we've marked it out, came up to the upside, induced this high. So we've taken out the high and then quickly start continuing to the downside. This is one of my confluences. So we've had the actual medium inducement happen. So we've taken out a high, a relevant high. We've came into a valid zone that came from a strong inducement, break of structure. So the zone is valid. So this is a valid supply zone. And then now we've jumped on a lower time frame. We can see that prices came into the zone, made another minor inducement on the lower time frame in our key time window. So these are the steps that I'm following. As you can see, I have certain steps that I need to follow. So we've had all these steps coming into my key time window. So right now, everything's perfect. And now I'm trying to look for an entry. So as you can see, after I had this inducement on the lower time frame, I wanted to mark out an RIFC. This is one of the concepts that I've been taught for quite a while now. And it's a little bit more of a secret one. But what an RIFC is a zone that is kind of really refined to wait for price to retrace back into it. So we've had an inducement, so we've built up inducement, and then now we're waiting for the mitigation. So we're waiting for price to shoot down, make some sort of break of structure, or make one of my type of lower time frame like entry models, and then come back into the actual inducement area. So come back into the RIFC that I call it, and then trade from it. So the first one that I marked out was this RIFC right here. I marked out this candle. It's a perfect doji candle, as you can see right here. Nice little rejection candle, coming with a fair value gap right after it. So I can see that it's got quite a lot of selling pressure. This is a nice zone. So what I wanted to wait for this to happen is I was either going to take an aggressive entry. So I was going to take a internal structure right here. I was going to wait for a break of internal structure, take it out, and then come back into it to trade from it. But I wanted to be just even more sure. So I did mark it out, but I wasn't sure if I was going to take it yet. So what I waited for was something I call a two-leg protocol. I waited for price to make two legs into the market. So we had one leg, we had two legs. I marked out my RIFC, checked how big the stop loss will be. So this stop loss was only 3 pips. And what you'll get to know about me, I trade very, very tight stop losses. So I'll trade anything from 3 pips all the way to 7 pips. 7 pips is like my max. I don't really try to go over that, as then you need to have a really, really large move to hit something like a 1 to 10. So that's what I've collected over the years in my data, and that's what's worked best for me. So after marking out this RFC right here, I set my limits there. We also had a break to the downside to confirm this second leg that is an actual break to the downside. So all it is, you're seeing structure forming to the downside. Then I marked out the RFC, set my limits, set my stop loss 3 pips higher, and then I waited for price to get me in. So price, as you can see, went down, retraced exactly back into my zone, and then gave me a perfect reaction back to the downside. This right here, which was the main break of structure, I did set break even as soon as we hit this break of structure right here. So as soon as price came to here, I'm break even, and now I'm safe in the trade. I'm absolutely safe. I can either lose nothing today, or I can go and make 6.5% like I did. So let me explain to you guys now how the trade worked out for me. So as you can see, came exactly into my zone and continued straight to the downside. I was not in drawdown for a second of this trade. The whole trade I was in profit. So we continued to the downside, caused this break of structure, giving me extra confirmation that we're going to continue to the downside. This is even more confirmation for me. So we clearly continued to the downside, building up even more liquidity, continuing to the downside, building up more liquidity, continuing to the downside. And then we had some sort of news that made actually quite a big candle to the downside, nearly taking me out of the trade. But I think around here, regardless, I think I was out. Where was it? So in just around what is this? So I got into the trade at exactly 227, and at around 232. So just in around what, 5 minutes, I managed to hit a 1 to 3 already. So in 5 minutes, I managed to hit a 1 to 3 and take out some partials. So the way it's set for me, I have very set stop losses. I have very set TP levels. So from one of my TP levels, I always have a 1 to 3. So from a 1 to 3, I take half of my trade off. So in just 5 minutes, I've already taken half of my position off. I'm at break even. So I'm already up 1.5% for the day. I'm already at break even, so I'm risk free on this trade. And now I'm waiting for price to show me and come to that 1 to 10 level. So as you can see, after we taken out a trade, I was already fine with it. Even though we had some more news coming, I was fine with it regardless. And the reason why I was fine with it is because I'm already at break even. I'm already taking 1.5%. So I do not care if news comes up and takes me out. I'm already up for the day. So I'm happy to just sit and wait it out and see what's going to happen. But regardless, news does, like, you guys think news is very unpredictable. News follows what the market is showing you. News is not as random as you think. Maybe if it's someone like Donald Trump speaking on a topic, maybe it's a little bit less predictable, but news is actually very predictable because it will go for those highs that you're aiming for. It will go for those lows that you're aiming for. It will go for those zones that you're aiming for. News is very predictable. So what I seen right here after it happened was news came in, shot me all the way down. I was actually chilling, and I just got like a notification because I had a little like alerts here just to tell me that price is coming down, just so I can go look over it. And I was like, what the fuck? I was like, how did it come with one candle, you know? But so I already pushed down all the way, but as you can see, it did not fully come down. And I know a lot of you guys would like be coming to this area and thinking, oh no, I need to take this trade out. Like, what happens if it doesn't hit? I'm fine with risking. I know my analysis. I'm comfortable with knowing my analysis. I will wait for this trade to happen, even though if it's taking a little bit longer, I will rather wait for this trade to play out. Even I'm up now 1.5%. Even if it comes back to break even, I'm still happy. I'm still up 1.5%. Some 1.5% is people's most average trade. That's what most people trade, like 1 to 2s, 1 to 1s, 1 to 3s. They won't really trade over that. So I'm happy already with 1.5%. I'm safe on the day and I'm up already. So after seeing this, I was seeing a nice rejection, and it's normal, of course, with news candles. If you're continuing with so much pressure to the downside, they need some sort of retracement to then continue back down. So I was waiting for price and made a nice retracement, building up all of this liquidity, as you can see right here. We're a nice buildup of liquidity. So you have some nice trend line liquidity right here. And some of the students were a little bit panicky about this. They were asking me because it came back down, induced this low, and then started reversing to the upside. And they were kind of getting a little bit skeptical. They were like, should we close it out now? In my opinion, this is nothing. This is just a move to come up higher, grab more liquidity, and then continue lower. Because I don't see a reason for price to move from here. Okay, there's no relevant highs or lows that it was taken out. This is very, very, very clearly building up a bunch of liquidity to the downside, to the upside, sorry, to then come lower, induce, come up higher, take out even more liquidity, and then continue to the downside. So this is something I was not panicking about. I actually waited for price to hit my full TP. I had my TP set. I just went off the charts. This is what you guys need to be able to do a lot of the time. It is good to monitor your trade if it's right at the beginning. You maybe need to wait for break even. You maybe need to wait to take your first partial and whatever. But after that, after you've got everything set, you should be able to walk away from your trade confidently after you've checked that there's no certain types of news, there's no certain anything. You just need to be able to be confident and walk away from your trade. So this is literally the whole concept that I took, and I hit a 1 to 10, which brought me actually payouts on 3 accounts. I also had one of my students on an old account. Imagine this. He was on an old account. He was just around 5% in drawdown on a 100K funded account. So this was a funded account. So he was in drawdown of 5K, 5%. And with just this trade, he decided to take this trade on his old account. He managed to get out of 5% in drawdown, come back into 2% drawdown, and then secure a payout. So he managed to make a 2K payout just from a simple trade. And then I had a bunch of other students manage to secure a payout, pass some accounts. Even one of our mentors, he managed to pass another account. And yeah, it was just a great day for everyone. And I'm actually really proud of a lot of the guys in my group, because they were able to spot this trade without me even giving some sort of analysis. I've seen them making out these markings, and that's my goal. I want you to be able to be confident in your analysis, and I'm able to walk away from you and know that I don't need to look over your shoulder 24/7 to see if you're doing something right or wrong. So I was really proud with the guys that they did actually do quite well with this trade. And of course, it paid out. So people managed to make quite a decent bit of money from this. And if you guys actually want more breakdowns like this, do let me know, because I'm probably going to start doing this quite regularly. I might even start doing this for losses, just so you guys can see where I went wrong in certain things, because I'm not scared to say that I'm going wrong certain places. And you guys will get quite a few loss videos, because my win rate is around 50 to 60%. In the past month, it's been a little bit better, but normally I try to keep around 50 to 60%, as that works out best for me. It gives me enough trade frequency, so I'm not going crazy. It gives me enough win rate, like, to actually become profitable from it. So it's something that I trade is around, like, I try to trade around maybe at least once or twice a week, which gives me around a 50% win rate. But I'll definitely be doing more trade breakdowns, and hopefully you guys actually learned a little bit from this, as it is a very simple trade. The way I trade seems complicated, but it's not actually that complicated. So literally, the reason I also trade with such small stop losses, because in such a small move, so just in around, how many pips was this? So it was probably around 30 pips, yeah. So just in around 30 pips, I managed to catch a 1 to 10, which a lot of the time when I see people catching 1 to 10s, 1 to 20s, it's like 200 pips and above, because they have such large stop losses. Whereas me, with quite a decent win rate, I'm able to catch trades like this with such tight stop losses. And the reason why I'm able to catch it with such tight stop losses and not be scared is because I have bulletproof confluences, in the sense of I have such a checklist that if I tick it off, it should be happening, and it should be giving me the reaction that I got this time. I was not in drawdown for a second of this trade. I was in profit the whole time. And this whole trade duration was from 227 all the way till 4:15. So just in under 2 hours, I managed to hit a 1 to 10 risk to reward. So I hope you guys are going to actually like this. And also, do let me know. I'm thinking about starting to live stream some of my trades. So I might be opening something like a Kick account, a Twitch account, and I think I want to be live streaming one of my trades. And I might start just live streaming in general. So do let me know if you guys want to see that as well. And hopefully you guys enjoyed this video and took something from it and learned something from it. So I'll see you guys in the next trade.